Hello and welcome back to Global Value. In today's video, we are going to be performing a fundamental stock analysis of Petróleo Brasileiro, known as Petrobras, ticker symbol PBR. Petrobras is on a lot of people's radar because they currently have a 26% dividend yield. However, it's easy to make mistakes blindly chasing dividend yield. So in today's video, we're going to be looking at the underlying fundamentals of the business to see if that dividend is supported and sustainable going into the future. So at the time of recording, their New York Stock Exchange listed stock is trading for $14.21 per share. Year to date, their stock price has done quite well in 2022. They're up 24.5%. Over the past year, their stock price is up 33.5%. Over 5 years, that's 9.3% compounded annually. Over 10 years, they're actually down about 34% from where they were 10 years ago. And going back prior to the global financial crisis, Petrobras has only returned about 2% compounded annually. Keep in mind that they paid a pretty high yield dividend in some of these years, so that adds to this return. So currently Petrobras is down about $2 from their 52-week high, which is up about $5 from their 52-week low. They are a large business. They have a market cap of 440 billion Brazilian reals, which is about 86 billion US dollars. For some more background about the business, Petrobras is a Brazilian-based integrated energy company controlled by the Brazilian government. The company focuses on exploration and production for oil and gas in Brazilian offshore fields. Production in 2021 was 2.8 million barrels of oil equivalent a day, and reserves stood at 9.9 billions of oil equivalent. At year-end 2021, Petrobras operated 12 refineries in Brazil with a capacity of 1.9 million barrels a day and distributes refined products and natural gas throughout Brazil. Petrobras was incorporated in 1953 and is headquartered in Rio de Janeiro, Brazil. For today's stock analysis, we're going to be performing a modified version of the 8-pillar analysis, taking a look at 8 key financial metrics of the business to come to a holistic and beginning understanding of Petrobras as a company based on those fundamentals. So let's get right into it. So starting off with pillar number 1, we want their average PE over the last 5 years to be below 22.5. Here we can see that they had a massive charge against their earnings that significantly impacted their PE in 2018. This charge against earnings was in the second quarter of 2018. Then it flipped the other way about midway through the year. So if we exclude that, we're going to get a more realistic picture of where Petrobras has been trading over this time frame. Currently, they're trading at just under 6 times earnings. Over this time frame, still even with this reduced picture, they've traded as low as negative earnings, and they've also traded as high as 89 times earnings. Quite a lot of volatility reflected in their PE. However, averaged out, they're trading at about 18 times earnings. So this is going to be a check on pillar number 1 to start off. Pillar number 2, we want their average return on capital over the last 5 years to be above 9%. Over the course of decades, a stock is going to return approximately what its underlying business returns, and these business returns are going to be reflected here in return on capital. So Petrobras has steadily increased their return on capital over this time frame. It was pretty steady at about 11.5% from 2018 to 2020, and then it really shot up last year. So averaged out over this time frame, they're earning about 13.5% returns on capital, which is another check here on pillar number 2. Scrolling down, even in the last 12 months, we can see that they've earned 36% return on capital. So they're continuing to improve their returns on capital, and this is still happening even up till now. Next up, for pillar number 3, we want to see 5-year revenue growth. In 2017, they produced $76 billion of revenue. That dipped down. In 2020, they were only producing $52 billion of revenue. However, that has sharply rebounded. In 2021, they ended up producing about $82 billion of revenues. So while it's only up about $4 billion over this time frame, it is up nonetheless. This is going to be another check here on pillar number 3. We're 3 for 3 to start off so far. And if we scroll down, over the last 12 months, they've actually produced revenues of $108 billion. So we're continuing to see an uptick in the business's fundamentals. Pillar number 4, we're looking for 5-year net income growth. No surprise that in 2017, they had some interesting net income numbers. They actually had negative net income, and that was reflected in their PE earlier. So last year, they produced $19 billion of net income, And so this is going to be a check here on pillar number 4 as well. Pillar number 5, we're looking for decreasing shares outstanding. When you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. When a business buys back shares and decreases the number of shares outstanding, they're increasing your ownership percentage of the business without you having to spend a dime, which ultimately increases your percentage of the business's profits. Here for Petrobras, they've kept their shares outstanding almost exactly flat over this time frame, down just the absolute tiniest smidge. So this one is going to be a check here on pillar number 5. Nothing to complain about, as their shares outstanding are almost exactly flat, while their other metrics have so far been up. So through 5 pillars, we've got 5 checks. Let's keep going. Pillar number 6, we're looking for 5-year free cash flow growth. Free cash flow is cash from operations minus capital expenditures. It says column here in green. Free cash flow is the lifeblood of any business, and a business can use free cash flows to pay dividends, buy back shares, pay down debt, make acquisitions, or reinvest back into the business. The value of a business is the net present value of their future cash flows based on assumptions for future growth and discounted at an appropriate rate for that particular investment. So in 2017, Petrobras produced almost $13 billion of free cash flows, and that has grown in each of these 5 years. Last year, they were producing over $30 billion of free cash flow. So this is exactly what we want to see here, and this is a strong check on pillar number 6. Looking at their free cash flow profile, we can see that they've actually increased their cash from operations while decreasing their capital expenditures, which is exactly what you'd want to be seeing from an integrated oil company right now. And in an average year over this time frame, they're producing about $19 billion of free cash flow. So that's a lot of money for any business. Then for pillar number 7, we want their net debt, which is long and short-term liabilities minus cash and short-term cash equivalents, to be below their average 5-year free cash flow multiplied by 5 to help us evaluate how the business is utilizing leverage. So Petrobras had $47.5 billion of net debt at the end of last year. When we multiply their average 5-year free cash flow of $19 billion times 5, that brings us to $95 billion. So they have plenty of breathing room here when it comes to their debt. The business is not overly levered in the slightest, and they're producing a ton of free cash flow relative to the amount of debt that they have incurred. That's an excellent sign for the financial health and stability of the business overall. So this is a check. So far through 7 pillars, we are perfect with 7 checks. Let's see if we can keep it going. Last but not least, the big pillar of them all, pillar number 8, we want their market cap to be below their average 5-year free cash flow multiplied by 20 to give us a reasonable starting point for evaluation of the business. So currently, Petrobras has an $85 billion market cap. When we multiply their average 5-year free cash flow of $19 billion, that we get an enormous $380 billion valuation here. This is a massive check by more than $300 billion. And this means that we've had checks on all 8 pillars. Now, just because this is the case doesn't mean that you go run out and buy this business. This type of analysis is a holistic beginning understanding of their business based on their financial fundamentals. So it's not investment advice, and it's not a buy or sell recommendation of any security. It is, however, a call to action to determine whether or not it's worth your while to go in and learn more about the business here. If you're interested in Petrobras based off of this analysis, please go do your own homework, do your own due diligence, learn as much as you can about the business, and really come to an understanding of the essence of the business as if you owned 100% of it. Please, before making any sort of investment decision, consult with the proper financial and legal professionals, because there are risks involved in investing into any type of asset, and there are especially risks involved in investing into overseas assets. Then lastly, Petrobras currently is paying out more than a 26% dividend yield, which is why a lot of people have been looking at the business recently. Here we're taking a look at their dividend profile. In all of these years, we want to make sure that their dividends are supported by their cash flows. So 2019 was the only year where they paid out more dividends than they produced cash flows. In these other years, they are producing way more than enough cash flows to keep paying out these dividends. In fact, in the most recent year, they paid out more than 50% of their huge cash flows as dividends. The business's management is currently returning a lot of capital to shareholders in the form of these dividend payments. Going forward, their dividend payments and their ability to return capital is really going to depend on their cash flows that the business is able to produce. This is a snapshot of the last 5 years and it's no guarantee for the future. So don't blindly chase dividend yield. Instead, evaluate the fundamentals of a business to understand the business and be able to have a reliable idea about the business's abilities to produce cash flows. So in summary, Petrobras checks the box on 8 out of 8 pillars. The business's fundamentals look extremely strong overall and they're trading at a very attractive valuation. The business also has a 26% dividend yield, which is one of the highest in the overall market. We've seen this recent surge in energy prices, and Petrobras has very much so benefited from the increasing price of oil. As an integrated commodity producer, and especially one that's owned by the Brazilian government, their business is really going to depend on the price of the commodity. And especially in Petrobras, again, you want to learn more about the business if you're interested in it. You also probably want to evaluate any sort of political risk, as this is more or less a state-owned enterprise. So be sure to consult with the proper financial and legal professionals if you run into more questions about Petrobras during your research. So with that said, that's it for today's fundamental stock analysis of Petrobras, ticker symbol PBR. If you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next. Thanks for learning about Petrobras with me, and have a great day.